Has buyer demand here in the Bay Area housing market peaked? Coming up on this week's Silicon Valley Snapshot. For the last several weeks here in the Bay Area housing market, we've experienced a bit of a slowdown. All of my colleagues are not talking about this. This is not front page news anymore. Over the last couple of weeks, we've experienced a slowdown in what seems to be activity levels here in most Bay Area counties. But before we get into the data, before we get into the numbers, if you're a home buyer in today's housing market and you're looking for a comprehensive data set to assist you in your home buying decision making, you can go ahead and text the word data plus the neighborhood or the zip code or the area that you're looking in, and we will send that information straight to your inbox. And if you're a home seller in today's marketplace and you're trying to figure out, is now the right time for me to list my house? And if so, what's the right pricing strategy and what homes are selling around me and what should I be expecting in terms of price? All of those questions will be answered when you text the word data plus your property address to the number down below. Buyer demand is certainly down month over month here in the Bay Area housing market in most counties. And it's starting to feel like maybe the best has already passed. And while that certainly might be the case, I'm here to provide a contrarian opinion, an opinion to the contrary. Now, is this actually going to happen? Will we see a resurgence in buyer activity? Who knows? But I do believe that there is a case to be made for buyer activity to see a resurgence here, for us to see a resurgence in buyer activity in the latter part of the spring, heading into the summer and fall months of 2022. Before we go there, we really need to start thinking about what was it that got us to this point. There were certain economic factors that got us to this point and certain seasonal events. It was just the cherry on top to all of the economic factors that were going on that I believe led us to this point. Let's start with the most obvious one, and that is the spike in interest rates. Over the last 3 months, we've seen rates increase nearly a full point from the low 4s all the way to 5%. And that is definitely not something to just dismiss as a non-factor. It certainly is a factor. That being said, let's really think about what this does, what kind of impact this rate increase has on monthly payments. In the $2 million price range, the average principal, interest, taxes, and insurance is somewhere around $10,000. A few months ago, when the rates were in the low 4s, the average PITI on a $2 million home, principal, interest, taxes, insurance on a $2 million home, was somewhere between the $7,000 to $8,000 range, just depending on the interest rate that you would get. Now, flash forward 3 to 6 months later, and we're now in a position where people are paying somewhere in the low 5s. Now, what does that look like in terms of increase in interest payment? Really, that 1% increase in interest payment is leading to around $1,000 more per month. Now, this is definitely not an insignificant amount of money, but let's really think about this. $12,000 over the course of a year for someone who qualifies for this kind of loan, which to qualify for this kind of loan, the average household income has to be somewhere between $300,000 and $500,000. And so if you're thinking that $12,000 a year is going to significantly impact the lifestyle of someone who's making $300,000 to $500,000, a household that's making $300,000 to $500,000, that is just simply not the case. That is a very insignificant amount of money to someone who's making, to a household that is bringing in that kind of income. Is it a shock to the system? Absolutely. Is this something where at the very beginning, we could definitely see some people pull out because, my gosh, like the shock, the resistance to the change is going to be the most limiting factor right now. It's not the $12,000 a year. It's the shock of the raise in interest rates. Now, just like any change, at first we're resistant to it, but as a society, we eventually adapt and overcome to any change that presents itself. And so if we continue to see interest rates rise to 6 or 7 or 8, yeah, I mean, definitely if they continue to rise at the rate that they're going, we could definitely see that continue to make an impact on the housing market here in the Bay Area. But if it levels off in the 5s somewhere, like if we start to see a leveling off in the interest rates here, somewhere in like the low to mid 5s, I believe that the spike in interest rates, while it will have a temporary effect on the housing market here, I do believe that long term, there will be an adaptation period of maybe 3 months or so where we see buyers pull out temporarily. Some buyers, not all of them, but some of them pull out temporarily due to that initial shell shock. But just like any other change that we've ever experienced here, we will see that adaptability present itself in the form of buyers re-entering the market at a later date. The other economic factor that's led us to this point is the sharp decrease in stock prices over the last quarter. The stock market has had its worst quarter in over 2 years. And while that certainly impacts a lot of Bay Area buyers, just simply because most of them tap into stocks in order to qualify for their home, and while that certainly played a part in this Bay Area housing market slowdown, the prospects are looking fairly good for the stock market heading into Q2, Q3, and beyond. According to FundStrat's Tom Lee, there's roughly a 90% chance that the stock market found its 2022 bottom on February 24th when Putin launched Russia's attack against Ukraine. Lee goes on to argue that as long as the U.S. economy is able to avoid a recession this year, the S&P 500 could surge to 5,100 by the end of the year. That represents a potential upside of 13% from current levels, or a gain of 24% for any investor who bought at the low of 41.14 on February 24th. Here's what we know. The stock market goes up, it goes down, it goes up, it goes down. And over the last quarter, it's been down. So it's only logical to assume that at some point over the next 3 to 6 months, we are going to see a resurgence in the stock market. And when that happens, I do believe that we will start to see more and more buyers come back into the market. For the well-informed buyer here in the Bay Area, there is a perceived window of opportunity in the market right now. And so if we see stock prices, when we see stock prices start to climb back up as interest rates level off, I do believe that some of these buyers who are well informed are going to say, oh my gosh, well, I mean, now's the right time for me to do this. I have more money now in my stocks. I'm going to liquidate some of them, go buy a house while there's still that window of opportunity. And eventually we're going to have enough of this that's going to create a resurgence in momentum here in the Bay Area housing market. Those two economic factors alone caused a lot of stress, a lot of strain on buyers here in the Bay Area, not to mention the ridiculously white hot housing prices here in the Bay Area. A lot of people just put the brakes. They're like, whoa, this is too much. This is too much for me to handle. And it makes sense. I mean, obviously, if you're a buyer in the marketplace right now, it's brutal. And even with all of these economic factors and this compounding effect of all of these different deterrents, we're still seeing home prices rise significantly, even here in April. By no stretch of the imagination are we in a buyer's market right now in the Bay Area. But we are in a situation where it's been less hot. It's less hot right now than it was the previous 3 months. And so there is a window of opportunity for any buyer that's looking for it. Now, here's the thing. Do we expect this to go on forever? No. And I believe, for the reasons that we just discussed, adaptability to the interest rates, as well as the stock prices resurging, the stock market resurging here over the next 3 to 6 months, I do believe that we're going to see a resurgence in demand to where it was before here in the Bay Area housing market. Let's not forget that last month we had a couple of seasonal events that happened too. We had spring breaks. The kids were out. Parents who were buyers all of a sudden have these little children on their hand that they need to go take to Disneyland and they need to go take to Hawaii. So that happened. And then also we had tax season. So taxes were upon us. We had spring break. We had Easter for those who celebrate. We have Ramadan for those who celebrate. There's a lot of things going on right now. A lot of seasonal events that happened in April that, on top of, my gosh, all of the economic factors that were upon us as well, there were a lot of people who were a mixture of distracted and a little bit discouraged. But as soon as the word gets out that there's opportunity in the marketplace, I believe that a lot of those people who fit that mold, the distracted and discouraged folks, they're going to come back into the market. And let's not forget, we don't even have a demand issue right now in the Bay Area. Like, we could lose those buyers and more. We'd still be in a really, really white hot seller's market. What's driving the housing market right now in the Bay Area is the severe lack of inventory. And we don't see that picking up anytime soon. The inventory levels have still been fairly low compared to where they were at this time last year. Just to illustrate that point, in Santa Clara County, Inventory in April is down nearly 5% year over year. So despite demand being down, we are still down inventory levels as well. So as long as those inventory levels stay suppressed, we could lose 20% of the buyers. Who cares? The truth is that there's still way less homes for sale than demand. We could lose 20% of the buyers overnight, and we've lost maybe 5 to 10% of them already. We could lose another 5 to 10% and literally not feel it at all from the perspective of home prices continuing to appreciate. Are they appreciating as quickly now as they were, say, a month ago? Absolutely not. But they are still appreciating, and we are still in a seller's market. And if things play out the way I believe they're going to play out, there will be a resurgence in demand coupled with that low inventory here, probably in the later part of the summer or early fall is when I predict that things are going to turn back around, and we're going to see that kerosene get thrown back on the fire that is the Bay Area housing market. If you've made it this far in the video, first of all, thank you so much. And if you're not already subscribed to the channel, what are you waiting for? Click that subscribe button, hit the notification bell, and hit the like button as well. It costs you nothing, and it really helps us get in front of more people that need our help just like you. And as a token of our appreciation for hitting that subscribe button, you can text the word free shirt to the number down below. You text the word free shirt to the number down below, and we'll send you a free shirt just like this as a token of my appreciation. This is Danny Gould, everyone. We're selling Silicon Valley, and I will catch all of you in the next Silicon Valley Snapshot.